Hi everyone, and welcome back to this monthly update video. I'll be covering interest rates, inflation pressures, how the ASX and S&P performed in August, changes to trust rules and deeming rates, and some big news for first-time buyers. As always, this video is general in nature and is designed for my clients, family and friends to help you stay informed. This is not personal financial advice. If you have any questions on how this relates to your situation, please do not hesitate to reach out to me. All right, let's jump into the monthly updates. So over the past few weeks, we've seen interest rates continue to drop, with the Reserve Bank of Australia trimming the official cash rate by 25 basis points, bringing it down to 3.6%. The banks have started moving in response. Westpac was the first of the majors to drop its 2-year fixed rate below 5%. This triggered a broader move. Now, many of the leaders are offering fixed home loan rates under 5%. So for borrowers, especially first home buyers and refinancers, this is good news. The window of opportunity is open again to lock in better deals. But it's important to move strategically. Some of these rates may not last long if inflation throws a curveball. If you need a broker to reach out to you, please let me know. And that brings me to the next point, inflation. After months of steady decline, inflation jumped in July. Consumer prices inflation rose to 2.8%, up from 1.9% in June. The increase was driven by higher energy costs, travel, and even everyday items like coffee. The trim mean inflation figure, which the RBA closely watches, also crept up to 2.7%. Now, some of that spike is due to temporary factors like delayed electricity rebates, but it has introduced some doubt. If inflation continues to climb or prove sticky, we could see a pause or even a reversal in interest rate cutting cycle. It's a bit of a balancing act right now. Lower rates support the economy, but the RBA may be forced to tighten up. Now let's move over to share markets. So if we start with the ASX 200, it returned 2.6% in August, particularly in the mining sector, which saw renewed interest thanks to several industry events and optimism around commodity demand. While some parts of the market are still finding their footing, confidence remains broadly positive heading into the tail end of the year. On the global front, the S&P 500 posted a 1.9% gain for August, continuing its strong run in 2025. That marks 5 new record highs in the month alone. But there's a cautionary flag here. Historically, a hot August has often been followed by a weak September. However, long-term projections remain bullish, with many analysts forecasting that the S&P 500 will continue to climb off the back of AI and tech stocks. So while short-term volatility is likely, the medium to long-term outlook remains solid. Now let's switch gears now to some legislation and policy updates, especially around wealth plan and retirement strategies. One of the biggest changes this month is the extension of trust lifespan in Queensland. Under the new Property Law Act, effective from the 1st of August, trusts can now operate for 125 years, up from the previous limit of 80 years. This has major implications for estate planning, intergenerational wealth transfer, especially for families looking to preserve and manage assets over a much longer horizon. It's important to understand what structure is suitable for your needs, so feel free to reach out. Another key shift is the upcoming change to deeming rates for the age pension. From 20th of September, the lower deeming rate will rise from 0.25 to 0.75, and the upper rate will increase from 2.25 to 2.75. These rates are used to calculate how much age pension you may receive. The government had kept these rates artificially low during COVID, but now they're normalising again. For many retirees, this could slightly reduce age pension entitlements. That being said, the pension payments itself will also increase, which should help offset the impact of the deeming rates. And finally, a major win for future homeowners. The government's 5% deposit scheme has been expanded and fast-tracked. From 1st of October 2025, first-home buyers no longer face income caps under the scheme. That means anyone, regardless of how much they can earn, can now buy their first home with a 5% deposit, no lender's mortgage insurance, and access to higher property price limits. This opens the door for a broader group of Australians to enter the market sooner, especially in more expensive cities where saving a 20% deposit has become increasingly difficult. So it's definitely worthwhile if you're looking to purchase a home to take advantage of these opportunities. Now, to wrap things up, Interest rates are falling, but inflation could limit how far that goes. Markets are performing well, both locally and globally, though we're watching for any pullback throughout September. We've seen some exciting changes around trust planning and home ownership incentives, while the pension system is adjusting for today's economy. As always, I hope this gives you a clear, useful update of what's happening and what it might mean for you. If anything I've said raises any questions or you'd like to have a chat, please do not hesitate to reach out to me. Thank you.